going on, market makers? I had Fractal Trade 15 make us another fantastic indicator. So, one of the key elements, guys, in trading is risk mitigation. And you do this vis-a-vis stop loss and position sizing. And there's different methods for using stop loss. You can use market structure, you could use a raw percent like 1 or 2%. The problem with that is that's a static stop loss, right? And different assets will move at different speeds and different time frames. Just for comparison, you could say Bitcoin, which is a parabolic asset, can obviously move much faster up and down than other assets can or will move versus like say the Russell or the S&P. They will move much slower in comparison to a crypto. So one thing that I've learned from trading the forex space back in the late 90s early 2000s is ATR. I have a separate video on the ATR indicator itself, but ATR is average true range, and what this does is it shows you the volatility, the price movement on that time frame for that asset, and it allows you to mitigate your risk by perhaps using a multiple of ATR. Most common is probably 2 times ATR or 3 times ATR. So you're going 2 or 3 times higher than the average price movement. I'm going to walk you through a setup example here. This is an imaginary setup, right? Here's the Russell. We're on the daily time frame. You can see it pumped up. It hit the 786 fib at 1930. So let's say you're thinking, you know what? I really want to short this. I think it's going to make some type of shape and come down. Well, you can use Fibonacci as a stop loss too, right? So you could look at the next fib level up, 886 at 1957, and stick your stop loss above that, and then think to yourself, well, it could come up, kiss the fib, I don't want to get stopped out, and then maybe come back down. But is there a more accurate way based on the asset you're trading and based on the current market movements to set your stop loss? And there is, it's ATR. If you look at the bottom right of my screen, what his indicator is an overlay showing you the ATR. So you don't actually have to have the indicator on your chart, right? You don't have to fill up one of your bottom panes that you might want to use for your MFI, your RSI, volume ratio, volume momentum, MACD, whatever you want to use. So you have the convenience of putting it here, and you can adjust the size of this, adjust the colors, adjust everything. But let me tell you the most important thing to read here. We're on the daily time frame. You can adjust all the multiple time frames. I have a daily, 60-minute, which is 1 hour, and 5-minute. Okay, and I'm going to show you an example on a smaller time frame. Daily time frame, the ATR percentage move 1.81%, but the number you care about is in that last column, ATR 34.59. That means the Russell on this daily candle has a volatility range of $34.59. So if you're going to use a single ATR stop loss, which would be a very tight stop loss, that alone would still get you above the 886 fib. Okay, so that would be considered a tight stop loss. A normal ATR ratio would be 2 times ATR. So you'd be looking at a $70 stop loss, which if you add that to where you are on price at 1930, you're above the 1 fib here at 1988. So your stop loss really should be up here on the daily time frame if you were planning on shorting this. Okay, if you're planning on shorting this asset, you'd want to be up there to be safer, because what that's telling you is the price volatility right now is this. The Russell can move $35 in a single day in a single candle. Okay, so this is giving you a chance for your trade to develop. Now you can also extend that out. Obviously, if you want to have a looser stop loss, like 3 times ATR, a lot of professional traders use 2 or 2.5, and you would just be multiplying these numbers. Okay, so real simple concept. Let me show you this on Bitcoin as well. Let's say we have Bitcoin here on the daily, and we want to go ahead and make this a 4-hour chart, right? Let's go ahead and do 4-hour chart. So let's look at our indicator, set this up. You can set your text size to wherever you want it to be. We can set this to normal, so you can see it over here, or large. Actually, let me turn this indicator off. I'll show you guys what this is called too. Let's do this. Let me go ahead and download it again. So it's Market Makers MTF ATR percentage table. Okay, so we go ahead and click that, and you can see it's over here. It has default settings on that I have 1 day, 60 minutes, and 5 minutes. Let's go ahead and make this 4 hours. So let's set this up. We have time frame 1 day, time frame 1 hour. Let's change this to 4 hours. Okay, 4 hours. You can change the colors. Your ATR length is important. I like to use 13 to match my MFI. I think that default on TradingView is like 14, but I like to use Fibonacci numbers. You could even extend that out to 2021 and see if you like those results as well. 13 gives you a nice current trend of volatility. And you can of course adjust this. If you're going to use a cell phone and you want to use this indicator, then you want to be able to change the sizing of this. Okay, so you might have to go to tiny to make it fit on your cell phone so you can actually read it. And you can adjust the table size too. So you just got to experiment with it. A lot of people, everybody has different types of cell phones, right? But on TradingView charts, you can do whatever you want. I'm going to keep it on normal. I like it smaller than this, but it's easier to show you and demonstrate when it's on this size here, right? So you can see we have our daily time frame still, and now we have the 4 hour, 240 minutes, right? So you look at the ATR in Bitcoin, 250 points. So Bitcoin's really flat here in this example. And again, we're just making this up, right? If you were going to long Bitcoin here because you think it's going up, you would look at the current price, 22,325, take the ATR at times 250 times 2 because I want to use a 2 times stop loss, right? A 2 times ATR for a stop loss. So that would be 500 points, meaning that you would have to be about what 21.8 on your stop loss here because Bitcoin's trading at 22,325. So 21.8, let's see where that comes out to. 21.8, right about, let's give you guys a visual of this, right about there. So you can see your stop loss would be right about here, and you're taking a long position because you think Bitcoin is going to consolidate and move up. So if Bitcoin came down and hit this, then you'd be stopped out at a 2 times ATR. And again, you have to experiment with what type of ATR works for you as far as multiples of ATR. I typically use, depending on the asset, like on cryptos, I might use a 3 ATR because of how parabolic it is. And sometimes if I'm expecting a lot of chop or a lot of volatility, even in an equity, I might use 3 times ATR. I never really go above 3. I don't think I ever have. I typically stay around 2 to 2.5 times ATR. And you just adjust it for your time frames, and you can see this really quickly as a quick reference point. And again, you're just multiplying that far right column by 2 or 3 or 2.5 or 2.2 or 1.5, whatever you want to do to determine your stop loss. You can see on Bitcoin here, just on the daily time frame, it's moving almost 900 points on the daily time frame with the current volatility on the chart. So a 2 times multiple of that would be 1,800 points. So it's always important to consider your position size if you want to have a good stop loss. And again, this is a dynamic stop loss. This helps you avoid stop loss hunting because you're not using those psychological numbers oftentimes that have 5 in them, right? So if Bitcoin's trading at 22,325 or 22,350, lots of people will just say, oh, I'll just use a stop loss of a few hundred points. That might be good. Well, it might be good, but you're really, if you did a 300-point stop loss, you're literally guessing, and the ATR is telling you in the 4 hour time frame, you're moving 250 points every 4 hour candle. So you're not going to be wrong for very long. And if you're right, that's great, but you want to give your trades a chance to develop, but that'll differ trader to trader and system to system. But again, 2 to 2.5x is the most common multiple of ATR to use in a trade. All right, guys, hope you enjoyed the video. I will post the indicator as well right underneath this video. Let me know if you have questions. Thanks, everybody.